You are listening to chartingwealth.com for Friday, the 22nd of December, 2017. We want to first show you what's coming up at the end of this month. It is the end of another quarter, the last quarter of 2017, and what we have on the screen, I'll explain to those who are listening to just the audio podcast. We have our quarterly chart that we have trainings on every single quarter. We're actually thinking about putting together a subscription service for folks who want to really hone their skills in long-term investing. Why? Because when you look at our chart, you can see that going all the way back to the year 2000, every time our chart rotates over, it is picture postcard perfect. That if you would have gotten out of the market when our chart rotated over, back in September, the end of the quarter in September of 2000, you would have not ridden all of the market down. You would have actually gotten out, and you could have put your money in something else, or just gotten out of the market and let the market drop, and then gotten back in when our chart rotated back over going up at the end of the year of 2004. And ridden the market up. Then when our chart rotated over going down, right as the market started to crash, you would have gotten out at the end of June 2008 and let the market crash, and then jumped back in March of 2011 and ridden that market up. And then we'll talk, as we have lately, about the Trump effect that occurred when the market was clearly getting ready to roll over and go down strong back in June of 2016. And the next thing you knew, the market rotated back over and has been skyrocketing, of course, since then. And we will give you a report on where the market is at the end of this latest quarter. Just a preview. How do you get this information? Well, you go to chartingwealth.com. It's only going to be made available to our subscribers, and become a subscriber to the Daily Market Podcast. You'll get every broadcast that we do, plus our weekly market review, in addition to the daily market reviews and the special trainings like the quarterly chart training, the Bitcoin chart training, all of that. So let's go from that quarterly chart, jump into the weekly. What do we see going on in the S&P? Everything's up for the day, by the way. On Thursday, as we go into Friday, the S&P 500 up 0.21%. Remember, we had that weekly vertical crossover all the way back on September the 29th, Friday, the week ending then. And the market has just continued to shoot up. Only 1 week with a pullback, really a sideways slide, a doji, where the market's sort of digesting gains back for the week ending the 17th of November, and just continued to go up, 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 up. If you would have jumped in with that weekly vertical crossover somewhere around the 250 mark, all the way up to 267.74. So again, beautiful, beautiful, beautiful as we continue to watch this market soar. Derivative oscillator pretty much flat, maybe gaining just a little bit. Price percent oscillator continuing to shoot up on that weekly chart. As we look at the 2-day chart, what do we see? It's getting pretty flat. Derivative oscillator losing energy, price percent oscillator flat. We do see on the latest 2-day candle ending on the 21st, everything sort of topped out there, even though, yes, the market was up for the day 0.21%. We're pretty much hitting the top of where we were on that last candle on the 19th. Now, we're wondering, is the market going to pull back and start rotating over as we go into the holidays, or going to continue to soar up? Remember, we're not forecasters, we're trend followers, and so far, the trend is still up on the weekly, flat on the 2-day. And as we go into the 4-hour chart, we can see that it crossed over going down in the morning on Tuesday the 19th and has really been sliding sideways, okay? Still sliding sideways, up for the day, the 4-hour chart in the morning, and the afternoon pretty much flattening out at about the same spot at about 267.80. And of course, that is, again, just sort of sliding sideways. The derivative oscillator continuing to gain some downward momentum. Price percent oscillator also headed down away from the red signal line. So again, nothing super strong there. It was up for the day technically, but we've had some prior strong move, well, not strong movements strong enough down to keep that derivative oscillator and price percent oscillator in the negative. So again, just continue to watch things. Remember, price movement is well above the weekly trend line and above the 2-day. So no alarm bells going off there at this point. Now going from the S&P 500 to the Qs, as we belovedly call it, it's my favorite chart, my favorite trading chart. It's the Nasdaq 100. What's going on there? Well, its crossover going up happened later, about a month later than the S&P 500. It was back on the week ending the 27th of October. And of course, we had 5 weeks of run up, 2 weeks of sideways slide ending on December the 8th. That was the week ending December the 8th. And going into the last 2 weeks, up movement. So far for the week, going into, we finished the 4th day of a 5-day candle, of a weekly candle, so it's not drawn until it's completed at the end of the day on Friday, but it looks like it's going to end up being a strong week. Derivative oscillator continuing to lose energy. Price percent oscillator flat. And again, remember our master indicator, price percent oscillator, we got a great training at the website, chartingwealth.com. Please go there under trainings. If you've not already listened to the price percent oscillator, our master indicator, you understand why we'll like it so much when you listen to that. But again, going flat on the Nasdaq. Was up barely for the day, 0.01%. As we look at the 2-day chart, what do we see? Well, the 2-day chart rotated over. In fact, we called that yesterday. That actually happened previously, but we're going to go ahead and make sure that we note with our arrow going in the right direction that it has crossed over going up on the 2-day chart, although that price percent oscillator awfully darn flat. The derivative oscillator has flipped over going up. Again, really a sideways slide so far on that 2-day chart. Price is hitting right at the 2-day trend line, dropping to that. So keep your eye on that, still above the weekly. And as we look at the 4-hour chart, what do we see? It actually crossed over at the end of the day going down. So really, again, just a sideways slide. At the end of the day, it was a doji, almost a doji, really a red spinning top, which again indicates indecision, but tending on the upside. But we do have a crossover, like we said, going down on our master indicator. But that's just the 4-hour chart. But again, keep your eye on it because the derivative oscillator is gaining downward momentum there. So just keep watching. Alarm bells should start going off when you penetrate the 2-day trend line, if indeed that occurs. So again, we've had some beautiful, beautiful up movement ever since that weekly vertical crossover there at the end of October. So things have just been gorgeous in the accuracy of our weekly vertical crossovers, particularly on the S&P 500 and the Nasdaq. What's going on TLT? Up for the day, 0.37%. Been overall a down week. Looks like we may be getting close to a crossover going down. Hasn't happened yet, though, on the weekly chart for TLT. This week has had a lot of down movement that's been somewhat recovered. We do have a red down candle with a long wick on the bottom and a wick about 1/3 the size on top, broken through both the weekly and the 2-day trend lines. And again, don't have a weekly vertical crossover yet. If it's a big down day on Friday, we may call that for you. We may not. Derivative oscillator losing energy. And like we said, price percent oscillator heading down strongly. And we see, of course, in the latest 2-day candle, we've got a huge 2-day candle moving down with a crossover on the 2-day chart confirmed, which again should be off-putting and concerning for anyone that is long in the tooth on the weekly vertical crossover. We, of course, did not recommend that you stay in that, particularly when we started having the strong down moves occur. But we've noted that 2-day vertical crossover going down, derivative oscillator also gaining strong down energy, as is the price percent oscillator. And as we go into the 4-hour chart, we can, of course, see things flattening out, bottoming out somewhere around the 124.30 mark. but the derivative oscillators lost a little bit of its downward momentum, and the price percent oscillator not going down nearly as much as it had before. And my 10-minute timer is going off. I'll try to wrap this up as accurately and as quickly as we can. We'll just continue to monitor. Don't have a trade now on TLT because of that 2-day vertical crossover going down. We'll continue to monitor and see what we see over the next few days, and if indeed we have a weekly vertical crossover going down at the end of the week. We'll let you know tomorrow when we record the comprehensive review and forecast for the week. Gold up 0.14% for the day. Weekly vertical crossover going down back on the 6th of October. Things slid sideways for a while, and over the prior 2 weeks, the week ending the 8th of December and the 15th of December, strong down movement, really a sideways slide, a spinning top, green one, open box means, of course, that we've got indecision tending up on gold. The price percent oscillator not heading down at nearly the steep angle it had been in prior weeks. Derivative oscillator losing some of its downward momentum. As we look at the 2-day chart, what do we see? 2-day chart is moving toward a crossover going up. Hasn't happened yet. Derivative oscillator losing downward momentum. Price percent oscillator heading up. Price movement is above the 2-day trend line and has pushed through the weekly also. So again, we see strong up movement in gold, like we said for the day, 0.14%. And lastly, what do we see on that 4-hour chart, my friends? It's still working. Crossed over going up in the morning of Thursday, the 14th of December, and but for 2 pullbacks, one in the afternoon on the 15th of December and one in the morning on the 19th. Otherwise, nice, beautiful up movement. And of course, in the morning on Wednesday, the 20th of this week, we had a push through the weekly trend line. It had already broken through all the way back on the 14th, Thursday, the 14th of December, broken through the 2-day. So again, gold continues to move up. Do note that the derivative oscillator is losing upward momentum and the price percent oscillator not heading up quite as much. Keep your eye on the prize. If you jumped into on the 4-hour chart into gold going up, you've done quite well. You would have gotten in somewhere around the opening on Thursday. That would have been like 118.68, maybe in the morning around about 119 maybe. Things as high as 120.32. So again, not bad, just over the course of a few days. So again, continue to keep your eye on things. We love to hear from you. If questions, problems, concerns, let us hear from you. You can always write us, cw@chartingwealth.com, CW as in Charting Wealth, cw@chartingwealth.com. And also, you can always write us right there from the website. So go to chartingwealth.com. Make sure you subscribe. God bless, my friends. We always love to hear from you. All the best from the entire team here at Charting Wealth World Headquarters.